Noon, we will be continuing our series on sector-focused conversations. Today, we'll be looking at two critical sectors. One of them is the oil and gas sector, which we know highly impacts our economy as a country, with a lot of our foreign exchange receipts coming from sale of our crude oil, and it being responsible for largely for our GDP as a whole, as a country. The second sector will be, well, it's a group of sectors: telecom, media, and technology. We'll also be looking at that sector as well as the impact, talking around things like broadband and then connectivity. Today we have with us Olu, who is also, who remains the head of the client sector at client coverage at Stanbic IBTC Bank, and he'll be joined with by Joyce and Mobolaji, who are the sector heads for the two sectors we talked about respectively. Hi, Olu. Thanks for joining us this morning. How are you doing today?
Hey, Taiwo. Good afternoon.
Good afternoon. How are we looking today? I hope you are keeping safe.
Yes, we are still on lockdown at home, even though there is a bit of a release in the country. And welcome everyone to this webinar. I'll just give our audience the team that is speaking to them today. We are part of the Stanbic IBTC Corporate and Investment Banking team. The way we're structured in the group within the bank is there are three primary pillars of business. One is the personal and business banking that deals with your individual personal accounts and small business. There is the wealth management that deals with wealth, pensions and asset management trustee. And then there is the corporate and investment banking, which primarily the large corporate are situated within that group. And we're looking at mostly multinationals with subsidiaries in Nigeria, regional corporates, as well as large local corporates. And if I put a number to this is around $20 million, 10 billion naira in gross revenue and above. Those are the type of company that sits in our world. And because of the sophistication required in terms of engagement, we have sectorized those clients. So for us, we have 6 core sector groups that we manage. First is conglomerate and industrials. Those are companies that are in steel, packaging, airlines, shipping. We also have the consumer sector. We have the power and infrastructure. We have the financial institutions. And with us today, we have the oil and gas and telecom media and technology. And of course, even though we engage in those companies, in terms of, we also look at them from a universal financial service organization. So we engage our clients in that manner. Now, COVID-19, if you look at this year, 27th of January, I understand, is when we, in Nigeria, we tested the first positive test of COVID-19. And as of yesterday, as of May 5th, this has grown to just over 2,800 in Nigeria, with a number of folks that have been recovered, 480, and just under 100, 98 people have unfortunately passed on. So this is very serious stuff that has happened. Now, if we look at what happened in the country, the government locked down just to prevent the spread within the country. And this week is literally the first week in 4.5 weeks or so of lockdown that there is an ease back in terms of getting the economy going again. So the conversation we want to have with Joyce and Mobolaji. Joyce runs our oil and gas sector, while Mobolaji runs our Mobolaji Sanni. She runs our telecom media and technology. So I'll just bring in Joyce now. Hey, Joyce.
Hi.
Joyce, are you there?
Good day. Thank you very much, Olu, and thank you everyone for joining. Yes, can you hear me?
Okay, there's a bit of a delay.
Can you hear me?
In the... Yes, carry on, please. Carry on, Joyce.
Can you hear me?
Carry on, Joyce.
Okay, fine. I had to switch off the. So thank you very much, Oludi. Thank you, everyone. Thank you for tuning in. These are truly unprecedented times for us. We have heard some experts call it a black swan event. I really do hope you're keeping safe. And for us in oil and gas, I must say that it has been eventful. That's the best way to put it. We can't say otherwise. But what we have also seen is we also try to manage the downside risk while we're also optimizing the opportunities that have also come around at this time. So first, speaking to how we got here in the first place. So we primarily got here by two things. It's a demand and then a supply shock. The demand shock coming, of course, from the pandemic, which saw a third of the world's population being locked down. And the demand for products, of course, came down at the same time. So in April 2020, by the end of April 2020, we saw 29 million barrels per day of demand taken out of the world. What this did on the other side, we also had a supply shock, of course, starting from the Saudi and Russia Paris war. This was eventful, and the reason why these two countries impacted so much was they contribute about 20%, 22% of the world supply. So we saw storage tanks filling up, we saw pipelines filling up, and of course, this led to the price drop. One more historic thing that happened at this time, of course, that we saw WTI prices go negative. So for us, we must say interesting. So looking at the next slide, the IEA estimates really says that from Q4 2021, we expect to see an upturn and a return of prices, but we're not putting too much leverage on that because a lot of these assumptions are also based on how long we think the pandemic is going to play out, depending on if it's going to be short-term, medium-term, long-term. So a lot of these are based on those type of assumptions. We also saw something that happened that had never happened before. So we saw OPEC Plus, which is typically the OPEC community with Russia coming in together, but now even more with G20 communities as a whole. This has never happened before. And as a whole, they put together initiative that ensured we took out at least as much as 10 million barrels from the world. We don't believe that this is going to create the immediate impact that is needed, but we believe that is a step, and it also leads us to see how we can collaborate a lot better in the future, especially in times when we're seeing a lot of nationalization. So it was good coming in as an industry, and then going even longer to see how in the oil and gas sector, as opposed to having the booms and the busts and the cyclical shocks that we experience, we're able to manage a lot of this going into the future. Some of the other countries, as China, India, Korea, US, they took advantage of the strategic reserves and then took out unwanted barrels. So really strong initiative coming in from that industry. Bringing it home to Nigeria, because Nigeria relies 30%, 30% of the revenues is oil and gas, and of course, FX is the primary earner, which is considered about 90%. We saw our primary trade partners, our crude export partners, India and China, who were in lockdown, basically unable to take the crude we had to supply. So Brent, which is normally the index, and then Bonny Light, which is the primary crude, which is a light sweet crude that we trade, we saw it trading at a discount to the Brent. What this means for us as a nation is that we saw decreased revenues, and in addition to this, the OPEX cuts, we saw that we had to reduce production as well, basically reduce the amount of revenues that we can bring into the port as a nation. On the upside, on the downstream sector, what this did was to give us the opportunity to remove the subsidies that have been in that sector. And we saw the pump price go from 145 to 125. We believe that this is going to continue into the future. But it also gave the individuals on the street and everyone else just consumable income, dispendable income at this period that is currently hard for everyone. So Today, at oil and gas in Stanbic IBTC, we support the oil and gas sector across three fronts. We have the upstream sector, which is where you have the producers of crude who extract the crude, whether it be from onshore or offshore or the shallow water. We provide support in that area. We also have the midstream sector. So you have the petrochemicals who play in that sector. You have the refiners, you have the gas, and then the people who transport the crude in the pipeline as well. And then you have the downstream, which is basically varied. So you have the retail, you have storage, and then the distribution of the refined products. What we've been able to do over this time is to basically support clients who work across the full value chain of all the sectors. So bringing it back to the corporates, so we've taken it from the world, we've taken it to Nigeria, and then now back to the corporates that we serve. So because this is a cyclical shock, we've seen this in 2014, 2015, but this is different. This came with a pandemic. And for us, having that, the double whammy, which is what they've called the twin shock in various ways, because it created two effects. Normally we'll see an oversupply, but then having demand taken out at the same time just made it even worse. So for upstream and service sector, which are normally the first to be hit, we're seeing a lot of operational disruption that is going on. Today, they're still considered as essential, but we're seeing shifts because of social distancing that is required, go from 14 to 28 days. And we're even seeing them do 3 shifts as opposed to 8. So you find situations where they're having to quarantine employees in hotels just to ensure the mandatory 14 days before they go to the rig, just to manage the effect of the pandemic and ensure that it doesn't spread in those areas. Of course, we're going to also see capex cuts. The first cuts and the first areas where we're going to see disruptions are going to be with the major producers. We have seen as much as $31 billion go out of the industry today. Exploration wells that were meant to be done, drilling that were meant to be done for non-discretionary things that were not generally considered as priority will automatically be wiped off. These will effectively hit into the service sector where contracts have already been signed to drill, and now you can't do that anymore in 2020. So we're going to see a lot of contract renegotiations that are going to come up from that area. The borrowing financing, of course, is going to reduce for this sector. So we expect to support them during this period. So in terms of the action steps we are taking, we just want to ensure that as an institution, we're able to support them on all fronts. If we need to extend any facilities, we'll do that at the same time that is required. If we need to revalue the borrowing base and just ensure that liquidity comes in, but also managing it with the positions that the client is taking at this time, we would take that in place. But the good thing is for this sector, 2014 and 2015 was actually a learning curve. So a lot of the productivity and the capex cost, a lot of the lessons learned in 2014 is actually what is being applied now in 2020. Still very different, really helped the sector to absorb the shocks that came out a lot more. The downstream sector is actually quite different. What we've seen here is they have actually taken advantage of the reduction in oil prices, find that people who have storage, who are able to store, are able to buy products, keep it on hand, and basically just take advantage of the low prices. But not everybody has storage. So we find clients who are able to buy products ahead of time, but then it's still going to be selective. Aviation is come up at all. Transportation is going to be varied based on the ease out of the lockdown in the country and depending on how well we manage it. So over the short term, Q2 to Q3, we expect a drop, but Q4, we expect an uptake of products on this side. LPG is a clear win in this sector. So everybody's at home. So everybody's cooking. Nigeria uptake, we're still very low compared to the rest of the world. And electricity, still not where we want it to be. You know, you find people using electricity to cook at home, but however, we're still a lot behind on the LPG sector. So we still expect a lot of growth in that area. On the midstream side, we saw projects being deferred, not necessarily not happening, but just a deferral of the projects, because we see that there tends to be some correlation with the gas. There is some correlation, of course, with gas and then of the crude prices. So there's a deferment of some of this project, but that doesn't mean that the projects are not going to happen in the midstream sector. So overall, the action steps we're taking for downstream is basically just to ensure that storage is key for them, digitization. We also see that companies that are integrated along the value chain, meaning a company that operates on the upstream, downstream, and midstream, are able to absorb the shocks a lot better than companies who operate in only one side of the sector. So extending your value chain is definitely the next step in that area. And of course, gas. Today, we have some of the largest gas reserves in the world. And we cannot take the next step that we want to as corporates and as a nation without truly tapping into that sector as a whole. So exploration of gas is definitely key. So outlook for the downstream sector for us is on the medium term to short term comes out not so negative because they're taking advantage of the low oil prices, but of course demand is muted. And then on the upstream side, on the short to medium term, we're seeing a lot of cuts coming in on that area, not so positive, but on the long term, we're seeing a lot of future collaborations that will come out in this industry in the future. Thank you.
Thanks, Joyce. That was quite insightful, and I think it has given the audience a good some insight as to how we approach oil and gas within Stanbic IBTC, and more importantly, your insights as to what the issues have been in terms of our engagement with the client. But what I want us to have a quick chat, maybe you can share some further light. The oil price, the price practically crashed from in the mid 60s or so earlier in the year and to low 20s and even in the teens. Can you just share what happened? What drove that aggressive price drop over that short period of time?
Okay, thank you very much, Olu. I think sometimes I'm also having to explain this a lot, especially when the crude price went negative. So I spent a lot of time trying to explain that the WTI is also different from the Brent. So first, I'll still start with the benchmark before I even speak to that oil price drop, because the benchmark, the WTI, is different from Brent. So Nigerian crude is priced against the Brent. The WTI is literally the light sweet crude that comes out of the United States. The Brent is typically made up of 15 producers who are in the North Sea, but then a lot of African countries, a lot of Asian countries, so about 2/3 of the world now price contract using the Brent, which is why you find that the Brent tends to trade at a premium over the WTI. So in terms of what caused the drop, I had mentioned it earlier. When the oil price war, Saudi and Russia did basically had that oversupply. So they oversupplied products into the markets. Storage was taken up. There was no room to store. Refiners who typically take light crude just to ensure they can optimize the products that come out of their refinery really didn't even have a need to, because at that point, the world was in lockdown. Why are you producing gasoline? Why are you producing aviation fuel when nobody's flying? So that also created a demand imbalance. So the primary users of the oil products really were not used during the lockdown. Created that demand imbalance of 29 million barrels that I mentioned at the beginning. And of course, because oil is a commodity, it's really based on who wants to buy and who is going to sell. And if you find somebody who is willing to take it from you at a lower price, then you start to sell at a lower price. So which is why I mentioned that we also had to sell our Bonny Light at a lower price when we had an oversupply into the market. So it's really a function of demand and supply. And now from what we see, storage capacities across the world also very important and key at this time.
Thank you. That was good. So we have a good insight as to the rationale around the price, why it came down. So what are we sharing with our clients in terms of what should they be doing post-COVID? Any thoughts around that?
Okay, thank you. I think for the various sectors that I spoke to earlier, So it's varied. So the upstream clients require a different advice from the downstream clients. So the downstream clients, because for now, are totally reliant on FX. So we're telling them to hedge. So even if they're going to do the importations now, please hedge your importations so that you are not caught up in differential that might happen in terms of price movements. We're also seeing on the upstream side, a lot of clients are coming to us. So what happens on upstream is it's either you extend tenures of these facilities, knowing that the valuation of the reserves have changed. So it doesn't take the fact that the asset is still viable. However, valuation has changed. So to ensure that you're still able to meet the payments that come due, what you do is then basically extend the tenures and then manage. Of course, there's also liquidity bringing that the client brings in. The ones that require, they need to go and get bonds. We manage that process for them and take them to the bond market just to ensure they're able to tap in on long-term funds that are required to support them in this difficult time.
Okay, thank you. Taiwo, I mean, please ask our audience to the extent that they are keen to send out some questions. We're happy to take them. So just let us know if there are some questions from our viewers. And I think from my own perspective, Joyce, I would like us to try to just highlight what we can do to support our clients now as we move to post-COVID. You've mentioned hedging of transactions, of foreign exchange hedges. What else should we be thinking of, or what else have we been discussing with some of these clients, restructuring some of their funding requirements? But what else can we be sharing with them? You can share with our audience, please.
Okay. So apart from the restructurings that we're currently having those conversations with, there are also opportunities for some mergers, for some acquisitions that we're also seeing. This is the time for distressed assets. So if we're also going to be doing some advisory in that area for clients who still have the liquidity and want to take advantage of that part of the business. So we're seeing a bit of M&As as well on that side, M&A opportunities. Valuations for a lot of the service sector has come down. So we find a mix of reaction when this kind of situations happen. You find clients doing drilling activities at this time because they're able to do those campaigns at 1/3 the price they would have done when the oil price is a lot higher. So find the right client, ensuring we have the right sponsor and supporting it at that period, understand what their future and strategic goal is still very important for us. So that is what I think as an institution, we've also taken a position and we understand who we want to work with. We understand how we want to work with this client. And we also want to work with them and see them through their long-term and future plans, just to ensure we're growing with them and partnering with them as an institution.
Okay, thanks, Joyce. Taiwo, are there any questions from the audience?
Hi, Olu. Yes, there are a few questions targeted at Joyce. So somebody wants to know, what is the Nigerian production capacity and new OPEC quota post-COVID-19?
Okay, thank you, Taiwo. Currently, it's 1.5. Explain how it was determined. Thankfully for Nigeria, that quota was done using 2018, as a base. And our 2018 volume was 2 million. So by the time the cut came, it wasn't as difficult for us as a country as opposed to other players. And in addition to that, Nigeria is quite fortunate. Condensates are typically added when it comes to calculating the total production that is sold out. And we produce as 400,000 barrels a day of condensates, which also adds to the total production and revenue that we get as a nation. So in effect, the cut was not as bad for us as a nation. The real impact has really been in terms of revenue because of the price decline that has come. Thank you.
Okay, we have another question that we can take. So maybe this would be the, if there's time after, when we're done with the second segment, maybe we can consider taking one, but we'll take a second one referring to the oil and gas sector here. Somebody wants to know the exposure of the banking industry to the oil and gas sector and how Stanbic supports its clients in that sector at this time.
Okay, thank you, Tyree. My understanding is 30% of the this is currently broken across the three lines. Over 50% of this is in the upstream. We find 30 in the downstream and then 20 in the service. Probably about 4 to 5 trillion of the total banking industry assets is in the oil and gas sector. So as Stanbic in this difficult time, some of the things I'd mentioned to Olu was also helping our customers identify opportunities. In every district, you find opportunities. And then with the ones that we have also seen that the asset itself, the asset valuation makes sense to ensure that we can extend those facilities when required, because we have seen this cyclical industry. This happened in 2014 and 2015. So the idea is to continue to work with the client using the existing reserves that they have and then stretching out the tenors of those loans and then ensuring that we work with them through this difficult time that we have seen. Thank you.
Thanks, Joyce. And I'll just quickly add, Taiwo, to our audience as well. In terms of how we support the oil and gas clients, not only we're banking the corporate and investment banking clients, we're also banking the vendors who provide services to our customers in CIB. So in personal and business banking, the employees of these companies, the suppliers to these companies, we're also looking at banking them as well to make sure that we absolutely bank the value chain. That's just to add. Okay, so I'm going to pivot slightly to the TMT sector. Mobolaji, are you on? Hi, Mobolaji. I'm not sure if Mobolaji is on right now. So Mobolaji Sanni, she runs our Telecom Media and Technology Sector. Mobolaji, are you on? So we seem to be having a bit of connection issue, which again talks to the opportunity that can come through in the ICT sector. I think she's trying to come through now. Hi, Mobolaji, are you on now? Hi, Mobolaji.
Olu, I think you can go ahead and we'll try and get her. We'll try and get her on.
Okay, so I'll just talk through to the ICT sector. So the ICT sector makes about 13% of our GDP in Nigeria. And to the extent that we'll see how that has grown. I remember within 10 years, this is something that was around 7%, and it has now grown to 13% of Nigeria's GDP. And that economy is continues to grow in that sense. Now, when we look at in Stanbic IBTC, we look at Telecom Media and Technology. We have the mobile network operators, the original equipment manufacturers, and the tower companies. The mobile network operators are the ones that deliver voice and data to us. The original equipment manufacturers are the ones that manufacture the equipment that the MNOs makes use of. And of course, the tower companies, they deliver the infrastructure that across the country so that we make all the connections. The media, you tend to see that the cable TV companies, the digital media, as well as the advertising, and outdoor media. And of course, technology, we have data centers, internet service providers, systems integrators, and co. Diving slightly deeper into this, the telecoms, you have the, okay. Hi, Mobolaji, welcome. Okay, well, no, you can carry on. You can carry on. So I've advised the public, the viewers, how we look at TMT sector, so telecom, media, and technology, and I'm just about to dive into the specifics around the telecommunications group. Do you want to carry on from there? Yes, carry on. We can hear you.
They can't hear Mobolaji. They can't hear Mobolaji, but they can hear Olu.
Okay, but I
I
can
can
hear.
hear you, but the audience can't hear Mobolaji.
Oh, really?
Mm.
Taiwo, do you want to just confirm that?
I can hear you.
I can hear
But
Mobolaji.
just
I can hear everybody, but but I'm getting the message as well.
Okay, so
yeah.
I think we should carry on, please. Let's carry on.
They can't hear Mobolaji on.
But they can hear you, Olu.
Oh, okay.
Okay, some people are saying they can hear her.
Yes. Some people are saying they can.
Okay.
Oh, okay. So can you all hear me now?
Yeah.
Okay.
Carry on, please.
Okay. So and apologies for everyone. These are the sort of just looking at the opportunities in the telco sectors. These are some of the things in terms of data penetration that the ISPs and also the telcos have to look into. Just looking at just on the back of what I've said, looking at what is going to happen post-COVID, I believe that there will be a shift in the way corporates currently run their business operations. And if we just take a step back and look at the country in terms of where we are, I think over the past couple of years, Nigeria has been on this journey in terms of digital transformation and trying to ensure that, we're at par with what is going on in the tech sector. But I think with the impact of COVID, we'll see some sort of acceleration in this process. If we look at the contribution in terms of ICT, with respect to the country's GDP, in 2019, we saw an increase from 2020. GDP at 2020 from the ICT was at 12.2%, and currently for 2019, we're at 13.04%. That amounts to about $49 billion in terms of what the contribution of telcos has been to this sector. And just, coming back home in terms of how we look and cover the telecommunication sector within Stanbic IBTC, there are three broad subsectors. We have the telecommunications, where we have the MNOs. These are the mobile network operators. We also have the OEMs, which are the original equipment manufacturers. We also have the towercos, which are the tower companies. Apologies, there are quite a lot of acronyms in terms of the telcos.
Oh, wow. It appears that we've lost Mobolaji again.
I think, Olu, you should carry on. Let's see whether she'll come on to the tail end of the conversation.
Okay. So just as Mobolaji was going through, we'll look at the Telecom Media and Technology, and the MNOs. They've got service. The service they have is for voice and data. They've also got the payment service bank license, which they will continue to build to grow their revenue. On the OEM side, they are predominantly foreign-based. There is Chinese companies as well as US companies, and again, they manufacture these equipments that the MNOs make use of. And then you have the tower companies that what typically happens there is the towercos, they purchase, in this case, they purchase the towers, which is an infrastructure from the MNOs, and then they lease it back to them. Now, what happened in the COVID world, everyone is at home in terms of working from home. So clearly, there was a lot of demand for data. Most individuals that will be working from the office, getting to their office, they now have to buy additional data, more voice. So clearly, the MNOs saw an increase in demand right from the homes of the individuals. The OEMs, they are more long-term in play. That they take a while for that transactions to come to play. So what typically happens is that because of the global logistics challenges, the OEMs found that some of their inventories that have been ordered by the OEMs to install, those are kind of delays in some around the world. And then, of course, the towercos. With the towercos, they are a bit more long-term in nature in terms of the contracts they put in place. So they are more resilient That's what we have found in terms of our engagement with these companies. On the media side, it's a bit of mixed bag. With the number of companies that are on lockdown because of the government made the call to make sure that their people are not transmitting the virus. Companies that were not essentials were on lockdown, and folks have been asked to stay at home. What that now means was those companies were not advertising because there was no motivation for companies, for people to go out and purchase products. However, with those that are at home, subscribers for the pay TV, we're seeing more movies being watched at home. Nobody can really get out. So there was a bit of a mixed bag there in terms of effect. And of course, technology, this is where we are. We're all using this mobile remote engagement with our customers. So technology is being encouraged, and we see that to be an accelerator of all the initiatives that one is looking at. And of course, fintechs would it's more of a enabling an existing environment. So it could be health technology, regulatory technology, and of course, financial fintechs providing solutions specific to a particular, it could be payments solutions, for example. So I could just, one of the areas that I wanted to highlight in terms of Mobolaji is around the funding. And of course, Taiwo, if there's any questions that you have received from customers or from audience, please share with us. But clearly, as we've seen in this webinar, one of our colleagues working from home, data issues, or we can see the challenges that data has come through. So clearly there are upside in terms of getting the access to data. We have my colleagues at home with all their kids, working with the school work, access to data, trying to download the teacher's information has been quite interesting. So yeah, so apologies to our audience in terms of getting this mixed bag, but we will continue to strive along. But there are opportunities, and we see that. Taiwo, any questions from the audience?
Yes, we have a few questions. I mean, first of all, people want to know what a tower company is.
Okay, so interesting. So tower companies, and there's a bit of history. So typically in a developed environment like Europe, US, and more advanced developing environments like India, you have the infrastructure in the telecoms, right? You have the MNOs, what we've just said, and I can go back to the slide. You have the MNOs, mobile network operators, and they are there to actually deliver voice technology data for you to be able to execute, for the customers to execute. The infrastructure that you require, the towers is what you have across the country, which connects all the connection or around the country, right? Typically what happens is those towers are owned by a company called, that's why we call them TowerCo in this sector. In Nigeria, probably 15, 20 years ago, when we just started the licensing, there were no TowerCos. So the mobile network operators had to build the towers. So they got the license, they buy the equipment to deliver their service. They will also have to build the towers across the country to put those equipment on them. But what that happens over time is that is literally millions of dollars that are just stuck around the country with no increasing in value. So what typically then happens is over time, we found corporations who have come in well capitalized that now purchase those towers from the MNOs and list it back to them. So number one, that does one thing. One, the tower codes, they are more, there's economies of scale, Some of these guys, these companies, they own 100,000 towers. So in terms of purchasing power for diesel, for maintaining those towers, there's a lot of economies of scale. And on the MNO side, it releases capital to them. They can now use to buy more current equipment to be able to deliver a better service to their company. So those tower companies, that's what they call a tower co. They are well capitalized, and there are two main ones in Nigeria. Yeah, so that's a tower company.
Okay, thanks. I mean, it's not like division of labor, so everybody can focus on the area of specialization. If I'm there, okay, good.
You got it.
Okay, thank you. What are the funding options? I mean, somebody else is interested. Funding options available to companies coming into the telecom sector.
All right. So if we look, we've just said, the companies the telecom company in Nigeria is the growth area. In the last 10 years, this is and the ICT has been maybe about 4 to 5% of the GDP. Today is 13, and expectation is that will continue to grow and take a bigger piece of the GDP. Now, funding-wise, we could look at the entire capital structure of these corporations. One would be just the regular working capital. Working capital would be, your cash management to be able to make payments, receivables, payables, and co. So working capital just to keep the light running. And then as we look to the next more longer term, companies can purchase. Can provide long-term funding to be able to do more longer-term investments. So what we call term loans. There's also CapEx, capital expenditure. And for more established corporations, which we've seen also in Nigeria, they can go to debt capital markets and in some cases, equity capital markets. We've seen in Nigeria that most of our MNOs, their balance sheet is quite strong, and they can take quite decent amount of debt capital to be able to execute on their strategy. The original equipment manufacturers, they can offer what they call a vendor funding. So, which means that the MNOs will get like a credit funding backed by another financial institution. So vendor finance is also available. And then I've talked about the tower cos. The tower cos, one, they are well capitalized in terms of equity, and they also use debt to bolster that capital structure that they have on their capital structure. So they could use balance sheet debt capital markets, equity capital markets. So there are a number of options available to them
across the three subsectors, the three categories under them. Thanks, Olu, for that. Another person wants to know, can you please explain the difference between the number of active subscribers in Nigeria and broadband penetration? I think that's also always been a topic of whether they're confused for one another, but can you bring some clarity to that?
Yeah. So the penetration itself, in terms of what typically happens is folks who have a subscriber base. You could subscribe from two companies, so you could have two phone numbers. That is being counted as the penetration, right? But so really it's around trying to make sure that you're not double counting. So there is a subscriber base, right, which the telco will tell you I've got 65%, but in some cases you could have more than one telco, and that's what causes the double counting.
Okay. But with regards to broadband penetration.
Yeah, so broadband penetration, I mean, the broadband itself is the subscriber to the telcos is one. The broadband is the kind of the data, right? And so in order for them to penetrate into the market, it takes a while to build the broadband. So they're building that over time. That is coming through. We have a broadband that comes into the country at the border, but now you need to go all the way into the countries. And similar to what I have at my house here, we had to get a broadband company to come into to this area. So it's taking a bit of a while. But yeah.
Okay.
I think Mobolaji is back on again. If anything. Carry on.
It's all right. We know what things are. Maybe you should quickly answer this last question for us. We've seen, now that we have you, we've seen a lot of fintechs spring up in Nigeria in the past 5 years or so, with many of them being small players. Now, the question says, what is the outlook for these players post-COVID? And are there any opportunities you identify in the sector? That's rather ironic.
I just want to add very quickly, Taiwo, when we look at fintechs, and it's way in terms of how we approach client engagement at Stanbic IBTC. Remember I mentioned at the beginning of the session, there are 6 core sector groups. Those fintech companies, they actually, they come through and we pull in other sector heads. So Joyce, for example, we'll engage on oil and gas and see where else can we collaborate with some of our sector heads in other sectors with other clients. So it's interesting that things are beginning to develop. Lots of investments are coming through for this fintech company, but effectively they are solving problems. They're solving key areas. So I just want to kind of reiterate that to the audience.
So a cross-pollination of ideas and across the teams in that sense. We're fast out of time, and considering all the glitches we have had today, considering today we're dealing with tech and telecoms, it shows that there's a lot of opportunities still out there. Thank you, Olu. Thank you, Joyce. Thank you, Mobolaji, and so sorry about your connectivity concerns or issues that you've had. We will we hope that things improve, and I think that is an opportunity for our viewers out there. If you feel that there's any opportunity out there, I mean, you can see it's live, the experiences are live here. Perhaps maybe there's an opportunity for you to jump into that sector. You can speak to Stanbic. I think Olu and his team will be quite happy to engage you on that and see maybe you can propose a solution, or you have something that nobody else has brought about this 5 years there. Olu, any last words?
Yes, thank you, and thanks to the audience for tuning in. Again, apologies for the connection, but we see opportunities in these areas. The final 2 sectors will be holding on Friday, which is our conglomerates and industrials. That is going to be an interesting one. And of course, our financial institutions, which has the banks and non-bank as well. So that will be quite even different set of insights from what we received from Joyce in our and from Mobolaji. But thanks very much. Okay. Thanks to Joyce and Mobolaji. Yeah, I'm happy. It was an interesting one. Joyce, thanks for all the insights on the oil and gas. I'm sure that will have been interesting. And Mobolaji for the insights on the TM.
Thank you.
Thank you very much. Thank you once again, audience. Thank you for watching. Thank you for tuning in today as well to today's edition of Blue Talks. This has been the second edition.
Thank you.
As